All right, let's dive right in. Today, we're going to break down an absolutely essential skill for any trader: setting your stop loss. We're going to focus on a classic, powerful method that uses support and resistance levels to protect your capital. Let's get to it.
So let's start with a quick gut check. Think about your last few trades. Was your exit point dictated by a solid plan? Or was it driven by emotions like hope and fear? Answering that honestly is so important because disciplined risk management, well, that's the bridge from inconsistent results to steady, confident trading.
Risk management can get incredibly complicated, but we're going to cut through all that noise. Today, we're mastering the single most foundational, logical method for placing your stop loss.
Before we get into the strategy itself, we need to understand our tools. We're going to be working with two of the most powerful concepts in technical analysis: support and resistance. Once you really get these, the rest just falls into place.
First up is support. I want you to picture it like a trampoline for the price. As the price falls, it hits this level, and buyers, who see a good deal, start to jump in. That wave of buying can stop the decline in its tracks and hopefully bounce the price right back up.
On the flip side, we have resistance. This is basically your price ceiling. As the price rallies up, sellers see it as getting too expensive and they start to cash out. That selling pressure creates a barrier, often stopping the price from climbing any higher.
So look, if you only remember one thing, make it this simple analogy. Support is the floor and resistance is the ceiling. This one idea is the entire foundation for the strategy we're about to build.
Okay, theory's one thing, but let's make this real. Imagine you're bullish on an asset and you decide to buy in. The million-dollar question is, where do you put your stop loss to protect yourself?
It's a dead, simple, two-step process. First, you look at your chart and find that price floor, the nearest, most logical support level. Then, and this is the key part, you place your stop loss just below it, not right on it, but a little bit lower, to give the price a tiny bit of room to wiggle without taking you out of the trade too early.
All right, so what about the other side of the coin? What if you believe the price is headed down and you want to place a short order? Well, the logic is exactly the same, just flipped on its head.
Again, two simple steps. First, you identify the ceiling, that nearby resistance level where sellers tend to show up. Second, you place your stop loss just above that ceiling. This protects you in case you're wrong and the price rallies instead of drops.
Let's just boil this all down. For a long position, your stop goes just below support, the floor. For a short position, it goes just above resistance, the ceiling. It's a simple, symmetrical, and really easy system to remember.
So we know the what and the how. But to really trust a strategy, you need to understand the why. Why is this simple rule so powerful and so widely used by traders all over the world?
Here's the core logic. A support or resistance level is a line in the sand. It represents a consensus between buyers and sellers. When the price breaks through that level, it's a huge signal. It's telling you that the market sentiment might have shifted, and your original reason for getting into the trade, well, it may no longer be true.
And that brings us to the bottom line. A clean break of support or resistance isn't just a minor blip. It's clear feedback from the market that your trade idea might be invalid now. That's your signal to get out, take a small, controlled loss, and save your capital for a better opportunity.
Which brings us to our final thought. We've laid out the rules in just a few minutes, and the logic is undeniable. But knowledge is only half the battle. The real question is a personal one. Do you have the discipline to follow these rules mechanically, every single time, even when your emotions are screaming at you to just hang on a little longer? That, right there, is what separates theory from successful practice.